Good evening, everyone. Stoked to have you all here this evening. Team training, here we go. All right, well, full house. Let's get into it. So, guys, I know you're all probably busy watching the charts in the background and can see things moving around, but I just reached down to grab my tea and I realized I moved it. That's funny. It's over here. Anyway, there we go. Little memento from Pebble Beach for any of the golfers out there. Got that from a golf course. Didn't get to play, but got to visit it and walk it. It's really cool. But good evening, good morning to you, Jacques, on the other side of the world. But yeah, see, Mike, I know you're keen to play golf there. That'd be epic unless you have already. But amazing experience to walk that course. Anyway, cutting right to it, guys. For those of you, let me check. I know we may have we've got some new ones with us. I know Francis is pretty brand new. Welcome, and anyone else who joined in the last couple days? I don't see any other names that have joined the last couple days, but yeah, definitely got a few on the way in. And in light of that, yeah, guys, I mean, something to think about. I don't know how you guys are getting on with your list, but I know, like, for instance, some people have got big lists, some people don't want to share it with anyone. That's completely fine. But if you've made a list, you've got some people, I want to make this as easy as possible for you, Mike as well included, this is how easy this can be, guys. And for instance, Francis has already done this. He's been here for a few days and he's put me in chats with half a dozen people. All you got to do is pique someone's interest and put them in a messenger chat with me or Mike or whoever enrolled you, and we'll just do everything else. Piquing interest, what I mean by that is literally you just sharing what you're up to in a sense of like something that you're genuinely excited about or getting value from. That can be a text, that can be a phone call, a voice memo, something as simple as, hey, I've started to learn something new. There's a massive opportunity here to create some freedom, to earn some extra money on the side. And if you're interested, let me know. I'd love to connect you, have a chat with you or connect you with one of the experts in our squad. And from there, you put them in a chat with myself or Mike, and it's as simple as introducing them to me, saying something you love about them, who they are, how long you've known them, yeah, something you really admire about them. And then second text, I can send you something to send to them in the midst of how to introduce me or Mike, something real simple, just to, edify two people, honor two people, set up a moment where two people can chat. And then I'll do everything else. I will help them figure out if it's a good fit for them or not. I'll ask them what their goals are, what they're aiming for, share them, give some free content to them, have a chat with them, do whatever. At the end of that, guys, that's an amazing way for them to start their journey. You'll never be able to quantify what that looks like for someone else getting started in this space, and one day them calling you up, potentially in tears, because that was the thing that shifted their entire situation. We all got you somehow, but we all got you because someone bothered to tell us about it, right? And in the midst of that, you don't know if the next person is going to be a Jay Bonham, or if the next person is going to outpace you, or the next person is going to outpace you so well that they end up helping you get better. I've had that. My dad is one of those. Shout out to my dad, who's probably, I don't know, he's got a meeting tonight. But, he's got involved. He was an accountant by trade. He's a full-time pastor during the week, but he's got a brain for this. And so we chat all the time about this. And it's quite cool in that sense of he learns and sees things I don't, and we're able to learn together. And so, yeah, guys, in the midst of that, the beautiful bonus is I'll do all the heavy lifting for you. You pique their interest, introduce them to me. I'm like, I'll do everything else, and it'll end with me giving them your referral link, so you can potentially get this all for free, or whatever beyond that, if that's your choice. But yeah, guys, I just want to reiterate that. Like, how are you going with your list? Have you got anyone in mind? I'm sure by now, after going through an entire boot camp and seeing what's been happening here, that the belief should be pretty high that this works. And yeah, just want to remind you of that, because the one of the greatest things I remember Greg Reno saying it once is the aiming to always be a river, not a reservoir. And if something's like got insane, amazing positive effects on my life, whether that be church, CrossFit, or MX shoes, or trading, I'm going to talk about it. So that's just me. But yeah, easy to do, easy not to do. If you want any help with that, honestly, we have an entire website built around how to do this at a pro level. But as simple as introducing someone to myself or Mike, we'll do everything else. But yeah, aside from that, I think we'll transition the evening, guys. So looks like the news has been happening in the background. But yeah, for tonight, Tuesday night, we've had obviously a massive boot camp, which has been loaded. Plenty of content to go and review and go back over. There's just so much gold in there. We're so grateful for everything Mike has shared with us. At the same time, now, guys, we have, as usual, full access to Jay. He's laying down recordings every single day of the week, breaking down the charts, mostly obviously the US 30. I know some of you already tuned into him, but I want to highly encourage you, tune into the replays. Like, if you can't tune in live, it's a weird time zone. We're still working on getting him to add some sessions that'll suit us better here, at least in New Zealand. But in the meantime, watch the recordings. And Tuesday nights, guys, this is where we do this historically, we've done this every week for coming up probably pretty close to a year, where we just take certain key aspects of the trading space, and Mike or myself or someone, maybe a guest, will actually just, add on some layers. And tonight, as always, Mike has definitely got some gold for us. So let me find you on the side, bro, and I'm going to pin you up here. And guys, drop some love and appreciation for Mike as he takes us away this evening, my man. So I know we've just had some news, bro, and we're still miles away from the London Open. But yeah, big things happening in the world of finance and banks and all that crazy stuff. So I'm sure you probably have a few things to say about that. But otherwise, go for gold, man. All yours.
Cool, thanks, Ty. Yeah, it's been a crazy week so far, even as the first day, but obviously there's a lot going on overseas. And I want to share a little bit about that tonight, if you could let me share my screen. And we're just going to look at how that can affect our trading, because even though we're technical traders, it really helps to understand what's going on in the bigger scheme of things. Okay, cool. All right, so before we do that, I'm just going to show you. So we're looking at the chart. This is the Dow Jones, but we can put on the NAS as well. I'm just going to focus on the Dow because it's very, very clear. This is the US 30. Now, what we're looking at now, when we look at the chart, we're wanting to see key levels, because that's going to tell us where price could be potentially pausing or stopping or rejecting. So what we can see is that price has held this level, 1, 2, 3, and it just bounced off it about 1 hour ago. And then we have this huge anomaly down the middle, which is normally what we call the head. This isn't actually an inverted head and shoulders, but note the key level around 31,794. So if we fail to break that, look, you can see we're breaking up above this trend line now. If we fail to hold this, then we are potentially going a lot lower. But if we hold this level, then we are looking at going up to the resistance level, okay, which is at the top here. Notice that price has held this area multiple times. That's the key area. So at the moment, price is trapped in this range. Very, very clear support on price with obviously this massive anomaly here. I'm just going to quickly have a look at the trade that took off just recently. Let's remove kill shot on. And this is one of our textbook trades where, in fact, had to have 2 takes at it because we had a double top. And then we had a sell signal. And it was a good trade. However, the sell was right into the 238. And so notice that we sort of bobbed around here for a while, went up. I got stopped out of that trade. But then we produced a triple top. Now we have 3 highs, 3 rejections of the high, and then we had another sell signal. So even though the first one got stopped out, the second trade was still on. And there's a couple of extra things that made this, trade amazing. For example, from the entry, it ran down to the low, 150 pips. So it was a great trade. And it only took an hour to do that. But remember, there's a couple of different conditions we want to look at. And one of the most powerful ones, apart from the super trade, is a trend line break. Because remember, when we break a trend line, we are breaking a form of market structure. So price is held in a certain area. Once it breaks out of that, then there's this release of all this energy. So what we can see about this trade is we have a triple top. We get the signal, and then as price, as we get our entry on this bearish engulfing that closes through the moving average, there's our entry bar. Notice that we're also closing below the 238, but look to the left. Can we draw a trend line? Yes. Here's a swing low over here. We can draw it up to these swing lows, and look how price closes through that trend line and closes below the 238. So price is trapped up in this region here, and it's coiling up. Obviously we get a big explosion, and then it's coiling for the whole afternoon, and then all the energy is released to the downside. So what we have is the triple top. We have a super trade because the 20 and 50 cross below the 238, and we get the break of the trend line. And all of those result in, in 10 minutes, we're up, 46 pips, which is pretty good for this time of day. So that was an awesome trade. And it was because price was just coiling up in that zone. Now, the same thing happened over here earlier in a different way. So we have a double top, actually triple top 1, 2, 3. Then we get the massive break below. And do we have a trend line in there? Yeah, we do, a little short one. See that? 1, 2, 3. And price actually breaks below that. The signal doesn't come till later, but I just want to show you this energy being released. It's all trapped in this area here. And when you break that trend line, boom, all the sellers jump back in. Notice we're closing below both the averages. And then price just explodes to the downside. So when we get these consolidation areas, that's where you get the most powerful moves from. Okay, because all of the energy of price is pent up. Remember, when we have a consolidation, what we say is the demand, oops, how do I draw this? Demand is almost equal to supply. So there's no disequilibrium, okay? But once you break that trend line, now we have excess supply. And so price just collapses. There's more willing sellers and buyers. And that's exactly what happened up in this trade here. So I just wanted to point out that trade. Let's just go back and see if we see any other examples of that. Here's a great example here. Notice that price is just back and forth, back and forth, back and forward. Horrible all morning. And in the next minute, what happens? Boom. Huge capitulation to the downside, and it goes down for 180 pips. So when you see price in that zone, you want to be looking for a signal that is in line with the trend. And we had a signal in here. There's a signal. We had a pullback, and then we had the downward swing. The same thing happened earlier in the day. Notice that price is trapped in this range, just going up and down, up and down, up and down. At the end of it, we get a signal, and that indicates that there is now prices potentially breaking out of that zone, and we get a trend downwards. So you'll sort of see these moves over and over and over. This one looks very, there's two very, very different ones here. They all look different. They're never going to look exactly the same. See how price is trapped in here in this range? Now we get a sell signal to the downside that produced in a stop out. I got stopped out of this trade last night. It looked like a perfect trade. It was actually too close to the bottom. I thought it was going to break through, but it didn't. So I shouldn't have taken that trade. Actually, it was too close to support. I got stopped out of that trade. And then price created the signal to the upside. We broke through the resistance, and all of this energy that was pent up in here, instead of being released to the downside, it went up. Okay, so what I'm saying is when we see these areas of consolidation or price being compressed into an area, you want to look for a release of price. Here's another area. Price is trapped in this area. And notice that towards the end of this congestion, price gets tighter and tighter and tighter. It's like it's penting out, and then the next minute it just explodes out. Okay, so you want to be looking for a signal, and notice that price is being held up or supported here by the moving averages. Okay, so that's something you want to notice as well. So that's going to be incredibly helpful trading this strategy. When you get to the end of the consolidation, look for price being supported by the averages and look for a signal. And the same thing happened with this trade earlier today. You'll see, actually, no, this one was a little bit different. We had the triple top. We had a false break, a false sell. We had one last push up the high to take out the stops. So we took out all the stops above this high here, took out all the stops and then crashed down. Now, where did this downwards capitulation end? Let's put a line here. Guess what happened down here? Who can guess? Put in the chat if you know what happened here. I'll just zoom out. Anyone guess what happened at this point here? It was a stop hunt. Perfect, Marie. Perfect. Yeah. So the big level, I'm just going to clear my indicator off so you can see it. The big level from last night was right here. That was the low of the day, actually early this morning. So think about it. If you were a buyer anywhere in here, if you were buying anywhere through here, if you were planning to hold for a day, where would your stops be? They would be under this low. Okay, so I'm just going to draw that again, because once you get this, it will change everything. The money, the stop loss orders, which means if prices come down and you have taken a buy, you have bought, you have a protective stop loss down here, S. Now that stop loss is actually a sell order. It's the opposite of your buy order. So if price comes down, it will stop out your position. It will sell your buy, and you'll make a small loss. So there is a lot of money in this box. And so what happens earlier, about an hour ago, the bigger players will always drive price to where the money is. So they came down, they liquidated all of that money, and then they took it up. And as price is going up, they're just selling and making a fortune. So actually the best possible place to buy on a chart is at a low of a stop loss, and the best possible place to sell is on a stop hunt. The best possible place to sell is at the high on a stop hunt. I'm just going to show you this quickly, and then we're going to go over the current market situation. Let me look for a good example on a higher time frame. This was an example that we looked at recently. Notice how, remember we talked about compression and price. Price is trapped in this range here. This is the spike high. If you have taken a sell position here, all of the money is above that high. Now the banks want to drive it down. So what do? They first, in order to take price down, they have to drive it up first. And they take out all of the stop orders. They liquidate all of the money in that zone there, and then they drive it down. So where is the best possible place to initiate a sell entry on this chart? Well, the best possible place, obviously, is right there at that top. Do you want to initiate a sell in the middle of the range? No, because it could go up or down. You can, but is it a good idea to initiate a sell here? No, you never sell low. You always sell high. So this is how the market works. The market will gravitate. And if we just remove some of these lines, you can see multiple stop hunts here. Stops below this low, they're taken out here. Stops below this low, they're taken out here. It just goes on and on and on. Let's just draw it down here. Whole of stops under this level. Price comes down, one stop hunt, two stop hunt, and then they take it up. So that's how the market works. Okay, so what we're going to talk about tonight is this current market situation. And for those of you who are watching the news, there's a lot going on right now. There's banks collapsing. The situation actually looks a lot worse than a lot of people understand. It might not happen immediately, but it definitely will happen at some point in time. Ultimately, what it means is that every time we've had this similar situation in the past, the markets have collapsed. So the stock market has crashed, the US dollar has gone down. So we don't know when that will happen. For example, at the moment, we can see that the Dow Jones has nice support. It's clearly been supported at this price. Now, it could bounce straight up from here, or it could collapse and go straight down. We don't know. But with the current situation, there's a lot of fear in the market. And what that means is that we have more volatility. Now, volatility means, if we just use this as an example, what we'll do is we'll look at this. A few days ago, price made a 1,000 point drop. 1,000 points. You can say 1,000 pips in a day. That is a huge drop. In the GFC in 2008, it went down 660 points. So this is bigger. That drop is bigger than the drop in the GFC in 2008. So when panic and fear hits the markets, instead of price trading nice and evenly like this, it starts doing this. It starts doing erratic, volatile swings, as you can see by this picture here. Now, what that means for us as traders is if the market starts swinging more erratically, we have to change our stop sizes. So typically, for trading the NAS, we've been sort of talking about between 25 and 50 pip stop, 25 being the minimum pip stop. At the moment, it's very difficult to trade with those stops because the market is swinging so much, even on a 1 minute chart. So what we have to do is, if you are currently trading, let's say you're trading $1 a lot, and you're trading with a 25 pip stop, you might need to start trading either a 50 pip stop or larger. Now, if that's the case, you need to change your position sizing. Instead of trading $1, you might need to trade 50 cents or 20 cents. So you have to adjust in your position size accordingly, because we will still get big swings, but you just can't have tighter stops because they get wicked out. And some of you, have any of you experienced that in the past few days at all, where you've set a stop and it's the moment you've set it, it's just been pipped out? Yeah, okay. That's because of the current market situation. So for example, this candle that's opened here, how big is that? So that candle is 25 pips. That's a huge candle before London opened. So, I mean, even in the last 20 minutes, we have a range of 90 pips. It's huge. So you can't, it's very difficult to trade with a 25 pip stop right now, unless this is the only way around it. If you want to keep trading with a 25 pip stop, instead of trading on the signal, you trade the pullback into the average. Okay, so I'm just going to show you two examples. No, I'll start with two examples of these sell signals here. So the first sell signal, we have two options. We can trade the close of the candle, which would be our entry, would be there. Okay, now if you have a 25 pip stop, there was very, very low volatility about 2 hours ago when this trade went off, so you can get away with it. But the way to get a tighter stop is to wait until price comes back and hits the moving average. Okay, that's what's going to get you a tighter stop. So that's your entry there. So instead of waiting for an engulfing, you just wait for price to move up into the moving average. So for example, if you entered there, then that allows you to get an 11 pip stop. Okay, we're going to look at a few examples last night where there was a lot of volatility, and I can show you how you can get very, very tight stops. Again, we have the second signal. Instead of trading the break, which is a more aggressive entry, you can trade the pullback here, the touch of the moving average. And that saves you, in this situation, it saves you 9 to 10 pips. Saves you 10 pips just by waiting for that pullback. Now, let's go and have a look at a couple of examples of last night, where I'll show you how instead of trading on the actual bar, we can trade the pullback into the averages, and we can get a much better entry. Okay, so here is some brilliant examples. Let's take a few of these. Okay, so this was our first one. Price rejected the 238, as you can see, straight up and straight down. We're now waiting for the crossover and the signal, which occurs on a green bar. Okay, now at the moment, the swing on price from the top to the bottom, let's just measure it, is 220 pips. Okay, 220 pips. That's a huge range. And that happened in 15 minutes. So after our signal, we're not going to enter on that bar because it's green. Normally, we would wait for the bearish engulfing, which is that candle there. Okay, now if you enter on a close of that candle, let's see where a 25 pip stop would get you. It would get you to about there. Okay, so you're not even above the structural high. So what can you do? When the moment price comes up and hits the moving average, you sell immediately at market, and then you set a 25 pip stop. So the moment that price hits the red moving average, 25 pips, and now your stop is up here, and price immediately moves down, and within 1 minute, you've made your 30 pips for the day. Okay, so what's the difference between entering on the touch of the moving average and entering on the close of the engulfing candle? Let's measure that in pips. You are saving 27 pips. That's how much you're saving. Now, this way of trading is best. I mean, you can trade it in a non-volatile market as well. But definitely when you're trading with a lot of volatility in the market and a lot of range, this is the way you can get a better entry and get a smaller stop. So that's the first example. Let's look at a few more that happened last night, because the same thing happened over and over and over. Okay. Now, remember, we normally only take trades in the direction of the trend. However, it's slightly different in a volatile situation that we have at the moment, because the market is moving so fast. Okay, so at the moment, last night price bottomed out down here, and then it reversed 211 pips in 20 minutes. So massive volatility. So any one of these bars, just one bar, is a day's target, 40 pips. Okay, so we can do counter trend trades in this environment, because it's very easy to get 30, 50, 60, 70, 80 pips. So we wait for the signal. What do? Touch of the moving average. Oh my goodness, look at that. So the moment price touches that moving average, you buy. Look for a 25 pip stop. It's nice and safe. Look at that, wasn't even threatened. So there's your stop down there, and you make your target in 1 minute. Boom, 40 pips. Now, normally we would wait for a bullish engulfing candle, and that would actually be this big candle here. But the problem is, if you enter on a close of that candle, how big is that candle? It's 35 pips. So you need at least a 40 to 50 pip stop. So you can do that, as I mentioned before, but you have to decrease your position sizing. Otherwise, your risk will be too big. So every person obviously makes their own decision. Am I willing to risk 1% of my account? Am I willing to risk 2%? It's up to you. But remember, if you trade with larger stops, if you keep your position the same size, you're going to be increasing your risk. So one way that you can keep your position sizing the same is trading on a touch of the moving average, rather than waiting for the confirmation of the close of an engulfing candle. So there's one trade. Do we get another one? Yep, here's our signal. There's the touch of our moving average. And then 25 pip stop, all the way down there, safe, wasn't even threatened. And again, you make your quota in 1 bar, boom, 65 pips. Oh no, 71 pips in 1 bar. Okay, so this is a far more conservative way. So there's 2 trades there back to back. Here's another one right here. There's your entry there, because we have a cross, we have a signal, we wait for the pullback, touch of the moving average. Man, is this blowing anyone's mind? And then 25 pip stop right there. And in 2 bars, oh, sorry, in 1 bar, you're up 36 pips, done for the day. That's what happens in the volatile market. So there's a lot more erratic moves. And this happened over and over and over. Here's another one. Here's our sell. Look, that's 3 in a row. Let's make it 4 in a row. Here's your signal. Wait for the touch of the moving average. Now, it almost touched there. Super close. It touched here. I would probably have taken it because it was so close, but the real touch was here. 25 pip stop. It's there. Let's put it in. Here's your 25 pip stop. And price comes down. That one gives you 25 pips and you get stopped out. Unless you took that one there, then obviously you're up 64 pips in 3 minutes. So that one could have been stopped out. I probably would have taken that one because it's the first pullback that is the most powerful. Here's your signal. The first pullback is always the most powerful one. And the market actually moves in waves. We talked about this before. And the actual market structure is comprised of 5 waves. 1, 2, 3, 4, 5, with a 3-wave correction. Once you get the initiation of a trend, the first pullback is always the best place to buy, either an uptrend or downtrend. And that's why it's always the first pullback to the average that is typically the best buy or sell. Here's another one here. Now this one here, we get our buy signal. And again, price is broken above structure. So there's our green line. It's broken above resistance. Look at this one, came back and touched the 238. So that one there, you can buy in the 238. 25 pip stop is below the 50 moving average. So you're super safe on that trade. And you're up 56 pips in a minute. Notice that as price moved up, it didn't really touch the 20 moving average until here. That's too late. You typically want the first pullback. It has to be the first pullback after the initial breakup. You want that first pullback. You know, this one here goes up, 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 and then it comes back and touches. That's too late. You want the first pullback. Again, in a volatile market, you want to be looking for that. And here's the last one that came out of this consolidation. Here's our sell signal. Here's the first touch of the moving average. Let's just look at that in real time. Okay, so let's play this through. There's our signal. Okay, next bar. There's our touch. So there's your entry right there. All right, and so here's our entry. We want a 25 pip stop right there. And let's put, yeah, you can put whatever take profit you want in. And then that one got stopped out. But notice that it's a lot better. It's a lot better than having your stop all the way up here, because just looking at this price action, you can see it's extremely volatile. So we don't know if it's going to wick up or not, but that's just one that got stopped out. If you had a 50 pip stop in this situation, it just would have worked out. That one got stopped out, but the other 4 were perfect. So, and then obviously those 2 trades we looked at earlier tonight. So that is a way where you can get a better entry. Well, here's another 2 that happened early this morning. Here's your signal. There's the touch of the moving average right there. Boom. And again, this was the beginning of Asia. So not a lot of movement, but still 19 pips in 1 minute. And then the second one, signal, and then first touch of the moving average right there. And then 25 pip stop, again, not even threatened. So that is a way that you can, instead of changing your position sizing and increasing your stop loss, you can keep your lot size the same, but it allows you to get a much better entry. Now, even in normal, let me just remove these drawings. Even in a normal situation, you can trade that exactly the same. So let's just go back and I'll look for a couple of examples in normal market conditions, because these are not normal market conditions. These are insane. So here we go. Here's our sell signal. And then first touch of the moving average is right there. Okay. And notice that 25 pip stop is safe. Okay. Price doesn't come anywhere near that. And the market reverses and goes straight down. This one here, notice that we get a sell signal. It doesn't occur here. Price just pulls away. But look at what happens when it does touch the moving average. Rejection and 50 pips. But this is too long. This is too far away. So I trust it will help you if you are looking to get a better entry in volatile conditions. Here's another great example right here. Buy signal. Look at that touch. Bang. Right there, straight up. Now, it tends to happen more like this in a volatile market because there are the swings are increased. In a more stable market, if the price breaks out, it'll just move nice and smoothly. But in a market at the moment, if a price breaks out, you'll get sellers and then buyers and then sellers and then buyers. So it's far more often that you will get a pullback to the moving average once you get a breakout. As we did just here. There's our pullback, and then price goes up for 48 pips. Okay, so that's one thing that's really important. So obviously it's an incredibly volatile situation. We don't know what's going to happen with the banks, but we do know that banks are collapsing. And the president came out saying the banks of America are safe. Now, when the president says something like that, you should be going, oh no. For them to actually have to come out and say that is not a good sign. So the numbers actually pointing to worse than 2008. And the numbers actually similar to the Great Depression. So it's not looking great. But we don't know for sure. What we do know is this is a tradable opportunity for us. And we just need to make sure that we're approaching it the right way by reducing our risk, by getting better entries, by understanding that the market is not going to fall in a straight line. It is going to have ups and downs. So for example, we had the first drop back here, big drop, but then look, big drop, big up, big drop, big up, big drop, sideways. So it's not all 100% predictable. What is predictable is your risk, and only you can control that. And there are better ways to manage that. And one of those ways is, again, either reducing your lot size or increasing your stop, or leaving your stop the same and getting a better entry on your position. Does anyone have any questions around it? I'll just have a look in the chat. Have a drink of water. Does anyone have any questions about the current market conditions? Because these are, I mean, this sort of market condition doesn't happen that often. And let me just show you what it does look like when it does happen. For real. I mean, if you look at COVID, this is what happened in COVID. So we haven't sort of approached that yet. We did have a very volatile period at the end of last year, straight down and straight up. That was pretty crazy. But it was a lot smoother, and we didn't have quite the same volatility on the day-to-day level. And again, COVID would just, drop like a rock, just straight through the floor. There was just nothing but fear. And the same thing happened back in 2008, which I can't produce on this chart. In fact, I think I can. Dow Jones. And this is the same with all the markets across the board. So there's COVID. And 2008 was, just a straight. It started slow. Notice that it produced all the energy in here, and then all that energy had to go somewhere. First drop, and then this was the big drop. That happened in about 8 days, and it was almost 3,000 points. And then we had crazy volatile period, up and down, up and down, up and down. And then notice the difference between all of this crazy erratic behavior to this here. Okay, so this is nice and subdued, just up and down, beginning a gentle trend. This is just like, whoa, wow, whiplash, 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 back and forth. So in this situation, we definitely have to protect our risk a lot more. In this situation, it's far more obvious that we are following a trend. And then look, as it continues, this is very clear. It's a very smooth, developed trend. This is just crazy. So in this situation, you have to be aware that if you buy it, it might just go straight down. If you sell it, it might just go straight up. So always trade the entries and always look to manage your risk. Okay, Lisa, what's the best way to use the news to help our trading? Okay, brilliant question. So we have some big news this week. I think we have the CPI data and a few other things. So the news is often catalysts. The news is often a catalyst. Oh, there's a sell signal right there. Let's see if it comes back and tests our moving average. Missed that by a few minutes. Notice that we had a bearish engulfing straight after it. Now, if we had entered on a close of that candle, we would be up 23 pips. From the high of that move, it's about 87 pips. There's quite a lot of volatility in the session right now. Down to the lows, we're looking for it to come down here. We have another 43 pips to go. Let's see if price comes back, tags a moving average. And then let's also jump over and have a look at the NAS and see if it's doing something similar. Probably will be. No, producer sell signal before, and we're just going sideways. Okay. So the news is often a catalyst for the start of a new trend. And what I mean by that is that the market will often be stuck in limbo, consolidation, waiting for the next news announcement to show everyone where the market's going to go. And so often, let's say you have price in this range, and then they find out that inflation is a lot higher than it should be, and then the market will just go boom. Okay, then at that point, all of this energy is released, and the market finds a new trend. So the news events are often catalysts for the start of a new trend. So the best way to use it is there's a few things actually. We might have to cover the news in depth at another time because there's so many nuances to it. One is to not react to it, but wait for the fuzz and the foam to clear. Because what happens with the big news announcement is it will go like this, and then this, and then this, and you're like, sell, and then it goes up, and you're like, buy, and then it goes down, you're like, sell, and it goes up, and we've all had that. It's just crazy. So what you have to do is after the news comes out, it will settle down, and then it will start to move in a certain direction. Okay, you have to wait for this to happen. Wait for the transition out of the crazy volatility into a bit of stability, and then it will indicate where it wants to go, and that's when you begin to trade and follow the trend. Obviously, if you get another thing that the bigger players will do, let's see if I can find a good example here, is that they will initiate that that new move on the back of a stop hunt. And that's why we trade from the stop hunts for the news. So this one here, I pointed out before, this was a news event that liquidated all the stops above the former high. Okay. How do I know it's a news event? Because the candle is just so huge. And it happened exactly at 8:30 in the morning, Eastern Standard Time. And the candle is 380 pips deep. Okay, so this was a news event. It liquidated all the stops, and then the bigger players, they took the market in the direction they wanted to. And for the next couple of months, you can see it was down. So they soaked up billions of dollars worth of positions on the Dow Jones, and then they just wrote it down all the way. So how do we trade with it? We look to enter on the back of these stop hunts at places of consolidation where there are obvious stops, like above here. That's the first thing. Second, once the trend has stabilized, we look to follow the trend. Now, if you look closely at this picture here, price goes up, and you might be going buy, 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 and then it collapses, and you're like sell, 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 and then it goes up, and you're like buy, 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 and then it sells, and you're like sell, 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 and then it goes up, and you're like buy, 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 and then it just goes down. So notice when the stability comes in, it finds a final top here, and then starts a nice trend downwards, and then it goes up a little bit, but ultimately we know that the trend is down for the next couple of months. So that takes a bit of practice, but that's the best way to approach trading with the news. In time, you can learn just to sell these at market on the big spike. The moment it spikes up, you just go sell with a 30 pip stop, and it just drops. But that takes practice. Just know that the news is often a catalyst for the start of a new trend. In fact, there was another one back down here I saw. Here we go. Again, it was a stop hunt. So this was the previous low. What happens when we come into New York? Look at all this craziness. Okay. Up, down, up, down, up, down, up, down. We get a big news event in the middle there that hits all the stops and drives it up. Drives it back down, drives it up, drives it down, and then look when the trend starts to come in. It's here. Look how it becomes stable and starts to go up. That's when you know, okay, the trend is going to be up from here. Sure enough, we pull above the moving averages, and the new trend is underway. Awesome stuff, man. That's so cool. All right. Okay, any other questions there? Oh my goodness, 8 minutes to go already. It's crazy. All right, so we haven't come back and had tested the averages yet on the Dow. Again, at the moment, we haven't got massive volatility. So you can see price is not moving very fast. Price is moving very slowly, 1 pip at a time. When we come into trading the American session, you know, some of you will see it's moving 10, 15, 20 pips at a time. It's going, you know, up, down, up, down. Oops, sorry. You know, it's moving very, very quick. And that's when you just have to go sell when it hits the moving averages. At the moment, it's price is going pretty slow. Even though there's a good range, it is moving slow. So again, the lowest risk is waiting for the pullback here. Now, even if you look for a sell position here, at the moment, you know, 25 pips is pretty safe. Like you can get probably a lower stop than that. One thing at the moment now, it looks like we're possibly making a double bottom. So we broke the low, and we failed to break lower. Look, we made a higher low there. Let's have a look at the 50-minute chart. Again, I'm going to come back to the NAS as well, but obviously you can see on the Dow, we are holding that support zone. So it's possible we might get a bounce from here. Let's come to the NAS and see what's going on there. Let's just remove the indicator, give us some clarity. Okay, so obviously massive rejection from the bottom. Let's go out to a 60-minute chart just to give us a bit more perspective. Notice the first low was a stop hunt. So here was our low back in March, beginning of March. First top hunt there, and then straight up. I'm just going to use a different chart because this one is something wrong with it. Here we go, that's better. Okay, how about that for a stop up? Look at that, bang, take out all the stops. So where is the best possible place to buy at this point? It's right here in this circle, okay, because you're buying right into all the money where all of the buy orders are. Price goes straight up. So, and then we've made a double bottom, we've got a rejection there, and then price pushed up, and at the moment has failed to make a lower low. So if we come down to a lower time frame, let's put a 15-minute chart in. Okay, it looks like we are, okay, kill shots indicator. All right, this is looking pretty bearish. We have produced a sell signal on the 15-minute chart. We're trading below the 15-minute chart. If we put our POC on, 5, oops. So we're around there. POC is the high of the day. Okay, that's fine. We're below it. It's not important. It's not relevant. It's all the way up here. Let's go down to the 1-minute chart. Okay, now where can we see support here? Okay, it should be pretty obvious. We can see that price has respected this area. Now, it can be this exact low, but look at the place where price has touched the most. It's this one here. That's the key level. Yes, there will be a number of stops below that low, but the key level is actually the one that's been touched the most times. See that one there, which is 11,925. So if we break that, we're probably going south pretty fast. Otherwise than that, you can see we're trapped in a range. Okay, for the last day, it's just been up, down, trapped inside the range. So once we get out of this range, we should see some sort of volatility that we had last night. Again, let's look a little bit closer. We made a low, we made a higher low, and another higher low. So we need to break down below that in order to confirm the downtrend. We had a signal here. That signal was not a wise idea to be taken. In fact, let's have a look at that. Remove. So obviously we would not have sold on that candle because we're selling right into this swing low here. It's too close to the low as well. It's only 10, 11 pips away. Okay, so too close. If we sold, pull back to the average. Again, this market before the open is moving pretty slow. The open is in 2 minutes, but at the moment, it's not as fast as it is. I mean, if you compare this price action with back here, you can't really compare it, right? So when I'm talking about entering at the average, I'm really talking about when we have all the volatility that we see over this side, okay? When the market is just going bananas. At the moment, it's very, very small. It's contracting, okay? But when it opens up and starts to go crazy, that's when we want to start initiating those more efficient entries on the pullback to the average. But if you did trade the pullback to the average, which is right there on the touch, then you have a 25 pip stop and safe as. Okay, so it's all the way up here. And you ultimately got to move down for 15 pips. And as the market turns around, you're probably breaking up now for scratch. So it's probably a scratch trade. So market opens in 1 minute. Let's see what happens. Let's have a look. Okay, I'm just going to go back to the Dow Jones, see what's going on there. 1 minute chart. Okay, so look at that. We're breaking back above the moving averages now. Again, the price action told us. In fact, sorry, I should have my full kill shot strategy indicator on here. Sorry, I don't have all of it on. Sometimes I remove it for clarity with the stars. We have a green star down here, okay, telling us that this move is a little bit exhausted. And then we have a higher low, which means price is possibly turning around. Okay, so that would help us potentially not look for a short here on the moving average. And there's the open, and the buyers are coming back in. So buyers moving back in. I'm just reading through the most recent chat I missed. So there's 50 pips in about 4 minutes. Whew, awesome. I took the sell after the pullback and immediately with the profit. This is gold. Yeah, it is gold, Russ. Well done. That's amazing. Good work. Okay. Let's go bananas. How come I've got a different price on this? 3-1. Very interesting. Okay, the NAS is there. US 30. Just getting different prices on my broker. Very different. Interesting. Okay. Anyway, great work, Russ. Yeah, it does make sense, Lisa. It's a far more efficient way of entering. Now let's have a look here. Again, look to the left, remove the indicator if you can, get some perspective. What do you see there? Trend line. The price has been capped under that trend line. If we break above that, then we're looking high. And when we break above that, we're probably going to get a buy signal. Because the moving average is probably going to cross in the next, there we go, there's the blue signal. Almost crossed up in 16 seconds if it does. And let's see what happens there. So getting that pullback into the average is, yeah, it saves you taking drawdown on your trade as well. So what I mean by drawdown is if price goes up, produces a signal and you buy, and then the price comes back down and you're like, oh no, oh no, oh no, oh no, it's going to hit my stop. And it goes like this and you're like, oh no, oh no. And then finally it goes up. So it saves the drawdown and it saves you a lot of emotional stress as well. Thinking about you're going to be stopped out. Okay, there's our blue arrow. Now, from where we are now, if we get a close above, we are buying into resistance. It would be great to see it close above this trend line and above the green resistance line. Again, that's a 50 pip stop if we trade down to below our moving averages. It's a pretty big stop. So what we'd probably want to see is a pullback to the average. Again, just looking at a different way of doing it tonight. So blue signal on a red candle. We can't take that. So we would definitely want to wait for a pullback. So this is what I would be talking about now. When price comes back and takes the first touch of the moving average here, that's when you would look to get into the trade on the touch down here. Because if price breaks above and goes higher and closes there, it's a great bullish engulfing, but your stop's going to be 30, 40, 50 pips. So price comes down and touches this moving average, we'll look for a long, because the buy signal is there. It's just on the wrong candle and it's just too far away for a stop. Now, if it pulls up and doesn't come down, then if it comes up like this, breaks through, then it might come down and hit the moving average a bit later. It might give us a stop on the first pullback after the break through the trend line. That will be okay as well. So definitely price is still respected by the trend line here. And obviously the 238 failed to break through, and the resistance of these two swing highs up here. So each of these swings, yeah, that one's 74 pips, 74, 60, about the same. They're good swings in price. 80 pips, 74 pips. So yeah, it's a bit hard to have a 25 pip stop unless you get those really precise entries. Okay, when the 50 and 20 cross the 238, does it need to have it start? Okay, so really you want it to be quite soon after, Lisa. So for example, you want it really to happen, if possible, when the signal goes off. There's a touch of the moving average, a little bit late there. Yeah, let's see what happens. Moving average crossed over. All right, so I can bring that up a little bit. It's gone through the averages, so there's a bit of protection gone there. So you really want it to happen at the same time, Lisa. So for example, we'll let this one play out. Let's come back and have a look. So here's this is one where it's a little bit late. So price, we get a signal, and price breaks below the 238, and the moving averages don't for another 7 or 8 minutes. That's a little bit delayed. Obviously, in time, as price goes down, you can have confidence to hold on to it. So that's okay. But let's look for a really good one. Here's a perfect one right here. Okay, so hang on, let's just come back. There we go. There we go. 30 pips, 36. Boom. 40 out. Done. Whew. Okay. So we did 40 pips in 1 minute. Sweet. So that's the beauty. Can you guys see that? That's the beauty of getting that pullback. My stop was down here. It was about 20 pips. Took about 8 pips. And then we got that one candle. And that one candle is 36 pips. So we're out one candle. Finished. Oh, that's awesome. I love it. And we're probably going to break through, but that's a nice candle. Did you guys see that? So everything I said makes sense. It makes sense not to, yeah. I mean, the other option is, you can buy on this engulfing. That's a good engulfing. You buy on the close of the candle, and your stop below the low is about 25 pips. That's okay. And there we go, breakthrough. Awesome. Okay. Oh, you blinked and missed it. All right. Yep. So I got out on the close of that candle, the top there. All right. So coming back to the super trade, Lisa, and then we'll close up because we were just 10 minutes over time. Here's our buy signal. Now, 2 candles later, the EMA's crossed the 238. Like that's what you want. Like within 1 to 5 candles is what. Sorry, within 1 to 3 candles, that's what you really want. And then you get the explosion higher. Okay, so right here where they look like that, all crossed together. Again, it doesn't happen that often, and that's why it's sort of the super trade. It's like the yeah, because that 238 just has to be in the right place. And most of the super trades will happen, as I mentioned before, out of a consolidation. This one here is a little bit delayed. You can see we have the signal closing below the 238, but the cross doesn't happen until about 6 bars later. It'll give you confidence to hold, but it still doesn't happen at exactly the same time. But most of the super trades will come out of a consolidation. Let's just look for one more, and we'll call it a night. Oops, what's going on with this chart? Whoa, hang on, I need to refresh this. This is crazy. I'll just go back in time a little bit. See if I can find one more example. 45 pips, Wayne. Awesome. Does anyone have any final questions while I look for this last super trade? Here we go. Here's another one here. So consolidation. Here's our consolidation here, going sideways. And then we have the big candle breaks above, and we have the crossover within 2 bars. Just in there. Okay, so the 230 crossover, 2 or 3 bars. Either this one or this bar here. So it's the start of a super trade. And if you missed the first trade, well, you get a pullback to the average. Boom, right there. There's your trade. Price just goes straight up. Okay, all right, guys, I'm going to leave it there for tonight. We're 10 minutes over time. Last question from Ty. Do you have any commentary for how gold and silver behaves time like this? Yes. So gold and silver are what we call hedges for risk, because they're seen as safe havens. So often gold, in times of crisis and panic and fear, gold will go up and silver will go up. So if we look at gold now, say USD, we should see an increase. I say we should. I'll probably say that it's probably gone down. Oh no, increase in price. Yeah, sure. So the last 3 days, price has exploded up. 4 days, and it has gone up 5.5%. So big increase in price. If we look at that on the 50-minute chart, it's just basically straight up. Wow. Okay, so gold is very, very strong. Silver will be strong. The US dollar will be weak because the economy looks like it's struggling. If the banks fall apart, the economy will start to collapse. And so the US dollar has been going down. All right, so in times of crisis, typically, the US dollar has been seen as a safe haven because people in times of crisis will also put their money in US Treasury bonds. However, the current problem is that the Treasury bonds might be worthless because the banking system is on the edge of collapse and failure. That's why the US dollar is going down in the situation. Normally, it will go up. Okay, at the moment, the US economy is extremely fragile. That's why the US dollar is going down. So gold will go up, US dollar will go down, stocks will go down unless the situation is rectified. But in the long term, it's not going to happen because of the amount of money that they've been printing. So the economy will collapse at some point in time. It's just a matter of when. All right, but don't worry, we know how to trade. And so we are producing a skill set for ourselves that can shore ourselves up. We can tell our friends and family that regardless of the markets going sideways, down or up, we are learning how to make money, and we can prosper even in the middle of collapse, fear, and panic. All right, Ty, back to you. Thanks, guys. Have a great night.
Bro. Oh, thank you. Thank you, thank you, thank you. As always, man. So much gold in there. And yeah, I know you guys all got so much value. I've got a page of notes, and again, like you touched on so many good things in there. I mean, just let on a little bit of Elliott wave source, the way you talked about waves in there briefly, guys. There's so much more behind some of those little one-liners. Some of you know, and the rest of you are seeing it now. And just the rejection of a line, such powerful stuff. Adjusting stops, adjusting risk, and yeah, guys, a real exciting time to be alive in terms of what the heck's going on. If you want to take in a little bit more of a massive, big picture view of the economy, what's going on, Ray Dalio is a genius. If you've never heard of him, I think he manages one of the largest hedge funds in the world. He's been around. He went back and did like 800 years worth of research in terms of different dynasties and the history, etc., of empires that have grown and risen and fallen. And if you Google, I think it's called Cycles, there's actually a YouTube clip that's all animated. It's about 40 minutes long and pretty much summarizes his giant book. So if you want to understand the rise and fall of different empires, he goes through, I think, part of the history of Britain and the Netherlands and America and what is currently China and these cycles, and it's really, really interesting to pay attention to where we're sitting right now. But like Mike just said, trading, it doesn't necessarily matter. We can make money up or down, right? And so learning this skill set is priceless. So anyways, I'll leave it with that. Thanks so much, everyone, for being with us tonight. And yeah, trade safe, and we will see you in the chat during the week. And what do we got next? We got Joey will put on I'm sure an an Elevate mentorship call for us on Thursday. Sunday morning will be the Freedom Revolution one. Greg and Mel dropped so much value on that on Sunday morning. Just waiting for the replay to get posted. Otherwise, trade safe, and we'll see you in the chat, everyone. Sweet. Alrighty. Good night.